what I'm leading to now is a company that's come out with a really good, solid set of results, but it might be not one that you look at every single day. The company's name is ARB Holdings Limited. Listen to this. Revenue up 25% to just under 1.6 billion. Operating profit up 16%. Headline earnings per share up 12%. And it's ungeared. It's got 180 million rands worth of cash on hand. And in the studio now in Johannesburg is Byron Nichles, the CEO. Good solid set of numbers during difficult times, Byron. You must be quite pleased.
Yes, hi Lindsay. We certainly were pleased with the set of results, and not only with the numbers, but with how the year panned out as a whole. We feel we made some good strategic advancements with the acquisitions of Eurolux and Industrial Cables, which were announced and only took effect after year end. But certainly a very solid trading performance from our core business in what's been a very tough market.
Well, let's go back to quickly those acquisitions that you spoke about, Eurolux and the cable business as well. So these haven't had any effect on the numbers that we're reporting on now?
Certainly the cable business, Industrial Cables, that transaction only became effective on the 2nd of July, so just after year end, so that didn't have an effect, save for the transaction costs. The Eurolux acquisition was effective from January, so that was included for the last 6 months of the financial year, in other words, the second half.
Okay, let's have a look at the revenue now. As I said in my introduction, up 25% to just under 1.6 billion. And the outstanding, of course, and the biggest contributor to that is ARB Electrical. Can you tell us about the period under review? It's obviously done extremely well.
Yes, indeed. That is the core business, and that's the business that was originally listed in late 2007. The business was founded some 32 years ago, so it's got a long track record of growth. It really is a supply of electrical product through to all sectors of the market, and I think that's partly what's been the strength of ARB over the many years, is our very diversified customer base, which allows us to achieve growth when certain sectors of the market are perhaps more subdued. The past year it grew at 15%, which was pure organic growth. We didn't roll out any new branches, we didn't make any acquisitions, so that was what we believe are certainly market share gains. And an aspect of the results that were very pleasing for us.
Yeah, you're the largest independent distributor of electrical products, a whole suite of products, and as you say, you're very, very diversified in terms of your customers. But to achieve this increase in revenue of 25% that we've just spoken about is interesting in an environment which is very subdued. I mean, which areas are particularly remaining stellar for you, for example? Because this is the sort of business that gives us an idea of what's really happening in the South African economy.
Yeah, as I mentioned earlier, we essentially supply into 6 key market segments. Government and parastatal, so the Eskoms, the Transnets, the local municipalities being one. The construction sector, which certainly wasn't one of the stellar performers during the past year. The mining industry, probably also slightly subdued on the back of low commodity prices. We supply a lot of our product into large and heavy industry, so typically your larger manufacturing concerns, and that was a good performer for us during the year, as well as into the electrical contractors, and that would be everyone from the electrician that comes to your house to replace a trip switch, all the way through to the larger electrical contractors that are building power stations up through Africa. And the African market over the last 12 months has been a good market for us.
So infrastructure spend incredibly important to you, Byron, because I've been hearing from certain other companies, particularly construction companies actually in the last couple of days, that it's just not coming through. The government spending that has been promised is not there. You're clearly not seeing those problems.
Yeah, well, we're certainly not seeing the spend come through either yet, but what we're finding out that there are patches of activity, and particularly at municipal level where there's still quite a lot of electrical reticulation projects that are taking place that we supply into. So I think rather than being one particular sector that's performed well for us, I think it's been more hard work and credit to our teams on the ground and at the coalface that have gone and ferreted out the niches of growth in the market.
You're clearly not just going to rely on organic growth, because you've displayed an acquisitive line, if you like, with Eurolux and the cable business. Any more out there that you might be looking at, because you've got a nice healthy balance sheet?
Yes, I think it's always been our ambition and was part of the rationale for the listing several years back. We certainly do have appetite for more acquisitions. We've got the balance sheet and the cash flow to support it, and certainly the ambition. I think what we'll find is over the next couple of months we'll take some time to digest and settle down the 2 acquisitions. And as we've shown from listening, in fact, I think it took over 2 years for us to announce our first acquisition. We've got a very conservative board when it comes to acquisitions, and we only do acquisitions that add to our strategy and that we believe add value to the shareholders. So we certainly are hopeful of making further acquisitions, but we'll have to see how those pan out over the next couple of months.